Today we're going to take a deep dive into trend line trading, and I've prepared a lot of chart and trade studies that will help you understand when a trend line is likely to hold or when it's likely to break, which is one of the most important things to know about trend lines so that you can make the right trading decisions. During this video, I have variation of very simple, straightforward and some more advanced trade studies, but let's start with a very simple one. So we have a trend line here. And what do we see? What do you think? Is this trend line likely to hold or break? Let's analyze it. First of all, we see we have a double top here, which is already an important indication because it tells us that at one point there were a bullish attempt for a breakout, but the bulls seem to have failed. Of course, we are still making higher lows, so we cannot neglect that, but this is an important clue. Also, when we zoom out and we look at the bigger picture, we see that the market is in an overall downtrend. We had a very strong initial push here down, and then here we are currently seeing a consolidation. The consolidation shows quite some bullish strength because the market is actually able to pull against the bearish trend direction, but we're not seeing a complete reversal, and especially here the double top is also very important. When we zoom back in, we can see that in most recent price history, we see a change in the lower low structure. Whereas previously in the consolidation, the market made higher lows. This has changed, and here's the double top. We made a lower low and now a lower low, and we are trading back into the trend line. Also, when we add the daily pivot point, we are seeing a change in the pivot point structure. The pivot point is here, the blue line. On TradingView, you can just search for standard pivot point, and that's the daily one. And you can see in an uptrend, the market trades into the pivot and rejects it from above here as well. But when the pivot point structure is changed and when we are rejecting it from underneath as resistance, that's a very important bearish clue. So we have a lot of things that are pointing towards the trend line actually breaking. We have the big picture downtrend, we have the double top, and we have the change in the high-low structure and also the pivot points. So it's more likely that we're actually going to see a break, right? And afterwards, you can see the market did break it and we traded sideways. We did not initially continue the downtrend, but at least we knew that it's not super likely that the trend line is going to hold and continue the uptrend. What do you think about this trend line? Do you think it's likely to break or hold? Let's dig into it and let's analyze it. First of all, we can clearly see that we are in a downtrend, but there's also a very strong bullish push here. You can see the market from the bottom here rallied higher, and you can see especially the last three candles here are very strong bullish. The bearish argument could be that we are at the 50 retracement, so we drew the Fibonacci from here to here, and then you can see we are perfectly at the 50 retracement level. So we have some bullish, some bearish arguments. At this point, it's very hard to say. And I would say it's a tie. We cannot say whether it's going to break out or hold, so we have to wait a little bit longer. Also, we can add the monthly pivot point, and that's actually one of the most important clues here. You can see that we are trading below the monthly pivot point. We started trading very strongly below it here. The market did try to push above it, but we traded below it. Here we are at the pivot. And this is a very, very important confluence point. The monthly pivot is one of the strongest pivot points that you can find. Obviously, we have the weekly, the monthly, and the daily. And the higher pivot points often, especially in the long-term time frames, carry way more weight. So this is a very strong resistance level that the market is now dealing with. Can we get above this? Then it's very likely that we're going to see a break and a complete bullish reversal. But when we zoom in and we wait a little bit, you can see that we're getting weakness in the market. We have a lot of wicks here, and it seems like for now the market is rejecting the pivots. So at this point, the trend line holding and we're going to see a move away into the lower side of the market is much, much likely. We go to the lower time frame, and now you can see the structure here. We have the double top and we have the liquidity run. I made a few videos recently about the liquidity run on my YouTube channel, so check that out if you're interested. But basically, what does it mean? We have the breakout attempt through the previous lows, and then immediately we have a push, a very deep push. You can see we are falling back into the range, but the clue is here the last candle. And this is the candle that is then completing the liquidity run. We have an engulfing candle. We are fishing for the stops that all the breakout traders have. If you get the breakout here, you're going to have your stop somewhere around here. Then we fish for the stop, and it's immediately reversed. So at this point, it is very likely that the trend line is going to hold. We have the big picture downtrend that we saw. We have the monthly pivot. We have the weakness. We have the break and retest pattern, which is a very strong bearish signal. So at this point, trading away from the trend line is the only reasonable thing to do. And afterwards, you can see here's the liquidity run. The market really fell over. So this is a very common pattern. And looking for those patterns where you have confluence around a trend line with some type of pivot and then the lower time frame break and retest, liquidity run, that could be a very great trading strategy for you to study. Next example, what do you think about this trend line? We are just here at our third touch point. What do you think? Looking at it, is it likely to break or hold? First of all, when we zoom in, we see rejection here. You can see we have multiple candlestick wicks here to the downside. The market did try to break it, but it seems like for now we don't have enough strength. You can see we are in a long downtrend, so we have wave 1, 2, 3, 4, 5 in here. So this would mean a complete Elliott wave sequence. And after wave 5, it's more likely to see not necessarily a complete reversal to the upside, but a continuation to the downside is not as likely anymore. And especially here with this triple bottom now, this is not a very bearish clue. Also, when we zoom back out, you can see we have a huge support and resistance area. Previous resistance turned into the flip here, and now we are back at the level. So we have a few things already pointing towards this being a very strong level. Of course, that doesn't mean that we could not break it to the downside, but it makes the breakout to the downside a little bit less likely, and we need a lot of strong momentum to get below that. Another clue, we activate the weekly pivot point in this case, and you can see we're trading above the weekly pivot point. As long as this is the case, and you can see how often do you get those perfect confluence levels, where the pivot meets the support and resistance level and the trend line. Those are levels that you really have to pay attention to because they can offer great trading opportunities. At this point, what you could be doing is draw your breakout level here above the highs, which would be those highs here. And if the market gets above this, this would clearly signal a change in the trend structure. As long as the market is not above the highs here, we are trading in the range, right? So in a range, I would be more neutral. If we get below the low and we can really break the trend line, the pivot and the support and resistance level, that would make me a complete bear and I would look for shorts. But getting above this would mean I would be a buyer. And afterwards, you can see the market did break here the highs, and that's where the trend really changed and we started an uptrend. So we can see how we can nicely put the odds in our favor. Everything before the breakout looks very bullish, but the final piece to the puzzle is actually waiting for the breakout. As long as we are trading sideways, I would not recommend trading, but knowing that we are trading at such a high impact level, that makes me really want to look for trades away from that level. Our next example, what do you think about this trend line? We have a few touch points here, so a very strong trend line. What else do we have? We zoom out and you can see we are in a long-term uptrend. What else can we see? We have a double bottom here. So the market did try actually to move lower, which is indicated by the lower highs. But it seems like the final push that would have led the market to completely reverse and get from this uptrend and turn this into a reversal pattern below the lows, that was not possible. So the bears don't have total control and they're probably not as committed as this make it seem. So a few things are pointing towards the bullish pressure building. And what you can see here is that the market is reversing into this level a few times. So a trading plan in this case would be you trade with a higher time frame, you trade with a big picture trend, you want to trade a continuation, but you want to make sure that you're trading out of this. You never want to trade as long as the market is trapped in a range or in a pattern. That's where most amateurs lose all their money. You really want to wait for the market to commit and to decide. Wait for the breakout, break and retest maybe, and then go long. And you can see we have the breakout, we have the retest, and then the market took off. Also, a very important field and very interesting field to study are those breakout scenarios. You will often see that a lot of traders are jumping on the breakout because it's very obvious and also the FOMO is kicking in, but waiting for the pullback and waiting for the stop run to happen can be a very profitable trading idea as well. What do you think about this trend line? Will it break or will it hold? So we have a few clues here already. We activated the automated supply and demand areas, and you can see this is the supply and demand areas that the indicator is drawing. If you're interested in the indicator, check the link in the video description or in the comments below. But what you see here is we have a bullish demand zone here, which led to a reversal here. And then below this initial demand zone, there was a new one established. This is quite common. So the market did push below that, but it doesn't mean that the demand zone is completely violated. There is obviously a lot of buying interest below that. The buying interest increases the lower you go because just like in the real world, if something gets cheaper and cheaper, more people are interested in buying. And if a lot of traders want to buy here, way more traders will be interested down here as well. Also, what you see here is very important. You can see the market really vertically fell here lower. The more we go down, the more people who sold here will be sitting on more profits, obviously. So the sellers are going to have more and more profits and are more likely to take profits. And if you're in a short position and you take profits, that's a buying trade. The lower we go, the more and more profit taking may occur and more bullishness is going to come into the market. What we see a few candles later is then the key here. You can see we dipped into the trend line and then the next two candles reversed higher. How did they reverse higher? With a lot of buying power. You can see when we look at all of this here recent downtrend, those candles are the largest bullish candles that we have seen in all of this downtrending action. So it shows you that the bulls are back. It also is here probably a lot of sellers are leaving the market. As the sellers are exiting the market and taking profits, the bullish pressure is increasing. And you can see we're running back into the previous supply zone. After the dip here, the market did react to the trend line. We spiked through the demand zone but pulled back. And then you can see as the profit taking increases, as more buyers are getting into the market really shoots higher. What do you think about this trend line? Will it hold? Will it break? So obviously the trend line is going down, but it looks like we are in a big range, right? When we zoom out, you can see we are in a downtrend overall, but you can see here lately within this trend line, we are more or less moving sideways. A very important clue about this pattern is the low structure. So if there would be a lot of buying interest, the lows would come up much, much quicker. But here you can see when we look at this low and this low and this low, they are not able to come higher at all. So this shows us that the sellers are continuously pushing the price lower back into the lows. That's quite a bearish sign. So the downtrend here is overall very important to note because it really sets the tone for the whole analysis. And then also the fact that the bulls are not able to get higher and the bears are continuously really driving the price down is very important. Now we activate the supply and demand area and also the higher time frame moving average. So this is the daily time frame 50 period EMA. And you can see the market actively rejected the moving average here and here and here as well. So we traded below it, tried to come above it, but rejected it. Came above it, rejected it. Came above it, rejected it. And we are staying below it. So that's a very, very bearish clue. Also, we are trading into the supply zone and at the trend line area. So this is a very strong level of resistance. The more things are coming together into a price level, the stronger and the harder it is actually for the price to break it. The more confluence factors you will have, the more people are going to look at it, and then it's going to be much, much harder to get the price on the other side. So at this point, I would say it's very likely to see more of a move to the downside. Here's a very important support level. So if you're getting into a short, this is very important to watch. And you can see afterwards what did actually happen. This is the retracement. This is what we analyzed. The market came back into the lows and we have a lower bounce. What is a lower bounce? The market moved into the support level that was established here, moved higher, but we can see we never even came close to the previous highs. So we made a significantly lower high. There was no buying interest here in the market. And a few candles later, the market broke out. This could have been your second trading signal. So if you're not comfortable trading the trend line touch at this point, you can see you would have gotten a second chance to then trade the breakout. This is quite an interesting pattern because we're going to learn a lot about bearish and bullishness. So first of all, what do we see? We are in a bigger downtrend. We had already here a trend line that was broken once. You can see if we would have connected the lows here, we have the double top, then we broke lower. And now this trend line is sloping down. We are in a downtrend and we have a downward sloping trend line. But look at the slope, it's very weak. So usually you have this back and forth, you have the down move, you have the up move, you have the down move, consolidation and down move. But here, no up move at all. The market did try to reverse here. This is very important. We have a low here. The market did try to break out and there was a bullish attempt, right? We stayed below the previous support as resistance, so the attempt from the bulls was rejected. We moved back lower, and then you can see we never came close to the previous lows. We really stuck here into the lows. Whenever you see that the market is really not able to reverse and come close to a previous high or low, that's a very important signal. And you can see there's so much bearish pressure here building up that this is a very important finding. We also add the monthly pivot, and you can see we're trading below the monthly pivot. We first rejected it here, then we stayed below it here, and now we are still below it. We are also below the moving average from the higher time frame. So very important bearish signals, and also this bearish pattern. At this point, a breakout here below those lows would make a continuation to the downside very likely. And you can see this is what happens. Those low momentum, weak consolidations are great patterns to study. Whenever the market is in a trend and then you see that we are going sideways and the opposite market force, so in this case the buyers, are not able to really get a foot in the door and to reverse the price or even make a significant move, that's a very important finding, because it shows you that in this case the sellers are still here the dominant force, and then it's just a matter of waiting. Granted, in this case you would have waited for a long time, but waiting is one of the most important traits that you can develop as a trader. What do you think about this one? Will it break? Will it hold? We're in a strong uptrend and we have two trend lines here, right? So two trend lines, does it increase the importance? Does it add more confluence? But what I would draw your attention to is the weakness. Do you see weakness here in the market? And we do have a price divergence. So when we look at the highs, you can see from here to here, you can see we are trading higher very easily. Then from here to here, still making higher highs, but not as strong as we did here in the beginning. And then from here to here, you can see the price is barely able to move higher, right? So almost a double top. And if you add a RSI here, for example, or a stochastic, a MACD, you will see a price divergence here. So that's a very important finding, because the trend is slowing down. And also the pivot structure is changing. So we activated the weekly pivots, and you can see here we traded above the pivot, here above it, here we stayed way above it, here we rejected it as support as well. But here, suddenly we are on the other side and we have the weakness. And also we are here in this consolidation. So it seems like the market, it has been going on for a long time. And remember what I said, the higher the price is, first of all, everybody who bought here is now having more and more unrealized profits, and it makes profit taking more likely of the buyers. Also, when something is very high, you are probably also more likely to sell it. So the higher the price goes, the more sellers are coming into the market, and that is increasing the bearish pressure here. And you can see afterwards the market reversed. So those price divergences, and especially the change in the pivot structure, is something that is really worth studying. I've been trading for around 15 years, and just in the last few years I've really come to appreciate the importance of pivots in a trend and what they can tell you. So I would really recommend study them, because they can be a great addition to your trading arsenal.